This is your own channel named Rajasthani Commerce Youth with a different vision of enlightenment. A watch your place where I bring such answers of your practical questions regarding the BCom subject. Okay, so this is the sixth video. This is going to be the sixth video for the chapter called royalty account. And before this, we have already done these five various topic contains by the chapter called royalty account. And my each video contains a separate chapter. Okay, so I have their fifth videos all in all till now already uploaded. So far, if you haven't watched that video, so please go and first of all check out that video so that you can understand these topics regarding the royalty account better way. So today I'm going to take this another topic which is called copyright royalty. And I know you all may be familiar with this word well, copyright. Okay, so today we're going to discuss about this word as well as if what this word says status regarding the royalty in the chapter. Okay, like copyright. And before this, in my earlier videos, I have already let you know everything about these four terms, okay, which are so imperative if you talk about this chapter called royalty account. So in this chapter, these words or terms are like plays a key factor. So I have already mentioned what's the meaning of that. Okay, so that it can be easier for you to solve the questions and the difference of lessee and lesser. So let's go on the next one like this. So this is our topic for this video, series 6, okay, like copyright royalty. So quickly take a look the meaning regarding the copyright royalty. So meaning concept regarding the copyright and royalty, what is that? So every writer or author has rights or authority to get his book published by any publisher, okay, like you also know about it, and having such authority or rights is known as royalty, copyright. Okay, like every writer or author, okay, that person who writes a book, okay, that person who writes a book is known as author or writer, okay, has rights or authority to get his book, get that book which is written by the author, okay, author, to publish by any publisher, or having such authority or rights is known as copyright. Okay, it's so clear. I have written that thing in my own language. It's not a book language. Okay, so it is more than easier to perceive. So let's move on. And neither an individual nor a publisher can use the authorities, okay, use the authorities right without his permission. Whose permission? That person who wrote the book, okay, like the author, the real owner of that particular book. So permission, and merely the author can hand over his authority to the third party person to print and sell out his book. Whose book? The author's book, in return of being paid a certain amount of royalty, and that is known as here copyright royalty. So whatever the certain amount is paid by the publisher to the book's author, that certain amount will be known as royalty account. So here you can see again, let's move on. Usually the author is paid the certain amount of royalty on the basis of the printed price. Keep in mind that thing, on the basis of the printed price of the number of the copies of the book are sold out. Number of the copies are books are sold out by the publisher or the third person which are allowed by the publisher, okay, like the marketer. Okay, so whatever amount and whatever number of books are sold out, okay, sold out on the basis of that printed price of that books, basis of the printed price of that books, or the number of that copies, amount, that certain amount of royalty will be payable to the author of that book, by the publisher. Okay, so this is the simple concept. Okay, so easiest concept to perceive that was the exactly meaning of copyright royalty. Okay, it's nothing but just a deal between the author and the publisher. Okay, and that certain amount which paid by the publisher to the author is known as royalty. So that is also mix up of copyright royalty. So here you can see, let's move on towards the accounting treatment. Okay, like in certain case of copy royalty, accounting treatment in such case of copy royalty would be as done as it used to be done earlier. Okay, earlier we have sold out so many questions regarding with the different topics. So whatever we were doing while solving this question, which belongs to different topics, okay, regarding this chapter, so such accounting system adopted by us will be applied here similarly. Okay, the analogy will be similar, not too different. Okay, so except one thing you need to keep in mind. Okay, one thing that sometimes publisher has to pay royalty amount, who's paid by publisher has to pay royalty amount in advance, keeping that in mind. Okay, we will discuss some things regarding the journal entry. Okay, which also known as Najrana. That was also important. Okay, what is the meaning of Najrana? An advance amount paid by the publisher is called as Najrana, regarding which following journal entries are passed out. So what kind of journal entries are passed out regarding paying the Najrana by the publisher to the author? What kind of journal entry we usually pass out to show that certain process of paying of Najrana by a publisher to the author. So let's see what kind of journal entry we usually pass. So here you can see, for your convenience, I have already written down that advance royalty or Najrana. These are similar words. Okay, both are similar. Najrana, you can call it as well Najrana, and advance royalty as well. So what kind of journal entry we have to pass if a publisher has to pay Najrana or advance royalty to the author of that certain book? So journal entry will be passed like advance royalty. Okay, whatever amount is payable, or Najrana. I already told you that advance royalty is also known by Najrana. Okay, another name of advance royalty. Okay, to the bank. Okay, to the bank. What is going out? Bank. Okay, so here you can see that entry represents the amount of royalty paid in advance by the publisher, to the author of that book. Okay, author of that book, and the publisher also have to charge that amount with the profit and loss account by debiting it into the P&L account. Okay, considering that amount, this advance royalty amount or Najrana amount, as an expense, he has to charge that amount with the P&L account. Okay, so he will pass that entry in order to charge that amount to the P&L account, like P&L account debit to the advance royalty or Najrana. Okay, advance royalty or Najrana account, and here you can see the entry represents the advance royalty transfer to the P&L loss account. Considering that amount, advance royalty or Najrana amount, as an expense of publisher, we gonna transfer that amount, that particular amount of advance royalty or Najrana to the P&L account on its left hand side. Okay, just because of all the expenses are written on the left hand side of the P&L account, or income on the right hand side of the P&L account. Okay, so we have seen this, and that is the whole thing. Okay, regarding, if you say a major topic or thing regarding this point called royalty, copyright royalty, that is the only thing, major thing. Okay, and that is not so major. A simple entry you just keep in your mind while if examiner asked in your question, it is given in your question to pass journal entry like publisher paying the advance royalty or Najrana to the author, so you have to pass that journal entry. So in order to understand that thing in better way, let's moving on the question first. Okay, so that you can understand this concept. Okay, that how to impose or how to implement this with the question. And here is our question, so I'm going to quickly read it once. Okay, like Professor Sharma wrote a book on cost accounting. Okay, so Professor Sharma is author who just written the book of cost accounting, gave the rights of its publication and sale to the Mr. Mahesh Book Depot, Jaipur, on the following terms and conditions. Okay, like these are the terms and condition in the points given here. So let's read terms and condition one by one. Like, the publisher has to pay 28,000 as Nazrana, also known as advance royalty. I already mentioned you earlier. Okay, at the time of agreement on 1st of January 2017. And the second point, terms and condition regarding the royalty payable at 15% on the printed price. Keep that thing in your mind, that royalty payable at 15% on the printed price. Okay, printed price of the book sold, subject to a minimum amount of 25,000 in each year. Okay, so we will see later what to do with this. Like in the third point, it is mentioned here, like publisher will have no right to recoup the short working. Okay, will have no right to recoup short working of any year out of the excess working of succeeding years. Okay, so here simply publisher has no right to recoup its negative amount of short working. Okay, that is also known as short working out of the excess working, as it used to be in case of solving question regarding the topic we just did earlier in my previous video. Okay, all of the topic. Okay, so like that. So in the fourth point here you can see it is mentioned here, like printed price of the book will be 400 rupees. So it was this point. Okay, the price is mentioned here, given here, that what is the price of printed book will definitely gonna relate, directly gonna relate with the second point. Okay, keep it remember thing. And in the fifth point, as you can see, publisher will pay the amount of royalty for any year on 31st of January on next year. 31st January on next year. Okay, on next year 31st January. Okay, it means after year ending, the publisher gonna pay the amount of royalty to the author. Okay, on 31st January. So you just simply have to change the date, or nothing big issue regarding the date of here. Okay, so publisher submitted the following accounts of Professor Sharma. Here you can see year given 1780-19. Okay, 1780-19. The books, a number of books printed, the amount of number of books printed. Here you can see in the year of 2017 5,000, 18 12,000. Number of spacious mans and the given. These two things is considered as expense. Okay, that pops up while production. Okay, while production. So simply you just have to deduct that amount. Okay, subtract that amount. Like in the year 2017 400, 600 in the year of 18, and in the year of 19 200, and simply 100 in 19, 400 in 18, and 200 in 17. And this is the main thing, like number of books remained unsold, or you can say closing stock it as well. Okay, like in the year of 2017 2018 5,000, in the year of 2019 so 500. So you also are familiar with this thing that whatever amount of closing stock, okay, whatever amount of closing stock we are left end of the year, is that becomes the opening amount with the year, okay, gonna start right after. Okay, right after whatever amount is left end of the year will be known as opening amount for the next commencing year or starting year. So here you can see the amount of 2000, which is the closing stock, okay, of the year of 2017 will become the opening stock in the year of 2018. Okay, and the amount of 2018, here you can see the closing amount of rupees 7,000 as a closing stock will become an opening stock in the year of 2019. Okay, the commencing of the year of 2019 here. Okay, so we will use that thing to find out the certain amount of the books are sold out, just because it is not given here. Okay, so you have to figure out that by using your accounting abilities. You might have studied earlier while reading the thing called cost accounting in the books of cost accounting. Okay, you just simply have to use that ability to figure out the amount of books sold. Okay, the amount of books sold in the year of 2017 18 and 19. So let's go check out how to see that. But before that, just read out the last line. Prepare the necessary ledger's accounts in the books of Mukesh Book Depot, assuming that the publisher has decided to write off the amount of Najran during the period of first 5 years. Okay, so the publisher decided to write off the amount of Najrana, not to like in an amount. Okay, you could say not to at a time. Okay, so he just divided that for the 5 years in order to write that amount of Najrana. Okay, so write off like transferring that to the P&L account. Okay, so for the 5 year, so whatever amount is payable as Najrana, like 28,000 here in the question given that amount 28,000 is payable by the publisher as Nazrana, as advance royalty to the author. So you have to write off that amount during the period of first 7 years. Okay, during the period of first 7 years. So simply have to divide that amount with the 7, like 7. Okay, you just simply have to divide 7,000. So in the first year 4,000 will be write off, in the second year 4,000 will be write off, in the third year 4,000, in the fourth year 4,000, like this the whole amount will be write off. Okay, so I already told you this thing, so let's just get our hands on the question. Okay, so this is all we need to do in order to solve that kind of question. Okay, I have prepared a table. Okay, so if you don't want to prepare this, you can simply figure out the amount of books sold out, but for your convenience and to present it in better way, I have made this, okay, table, so that you can perceive it in better way. And I have already told you here mentioned the cost sheet. Okay, you might be familiar with this thing, cost sheet. Okay, so here you can see in the particular in the year of 2017 18 19, which also was given in the question. So opening stock. Okay, so what is the way of calculating the thing, like any product is sold out, or another thing like closing stock or total production amount. Here you can see as per the cost sheet it was mentioned here, you just simply have to take first of all opening account, okay, opening stock, and add purchase or production amount, whatever it is, add both, and less all the expenses are incurred while production. Like I have already shown you that in the book there was some expense mentioned in the question, like no species given and no wastage. Okay, so these two expense, such expense like these two. Okay, so you have to take as well that in order to deduct that. Okay, and we'll get that amount as total production, and out of that total production, you know, whatever amount, whatever quantity of product has been sold out will be written here, and that is what we need to figure out. Okay, what we need to figure out in order to pay royalty account. Okay, in order to pay royalty, and this is the amount of, and whatever we gonna sold out, okay, out of the total production, whatever is left behind is known as closing stock. Okay, which is still remaining in our stock. So that we need to figure out the amount of the quantity of sold out of the stock of the books. So simply here you can see, with the same thing I'm gonna do this here. Opening stock, okay, in the year 2017, 18, 19, I have figured the year here, written out the year here. Here you can see, and add, like here, opening stock and purchase, we need to add production, printed books, as it is given in the question as well, that in the year of 2017 there were production of 5,000 books. In the year of 2018 there were production of 12,000 books. So here you can see in the year of 2017, 5,000 and 12,000, and opening stock was also given. I already mentioned you that was the meaning of opening stock and how it changes, in the next year, for the next year, as an opening stock. Like the 2000 amount of closing stock will be an opening stock in the year of 2018. Okay, at the commencing of the year of 2018. Okay, and 7,000 in the year of 2019 will be opening stock. So here you can see opening stock. In this 2017 there were no any certain amount of opening stock. Here you can see, okay, because of that year is commencing from the year of 2017. If there were given any further information regarding the 2016 year, so we will return that here. Okay, so in the absence of the sufficient information, we're gonna just simply written down the information what we have provided in the question. So in the year of 2018 you can see 2000. In the year of 2019 here you can see 7,000. And add production or printed books. Here you can see printed books 7,000, 5,000 and 12,000. And less expensive, like I have already mentioned you that in the question we are given two types of expensive, like number of suspicious given, and number of books has gone wastage. Okay, has gone west. So here you can see, 400, 600 and 200. So here you can see 400, 600 and 200. So, and the number of vested books, here you can see the amount of number of vested books in the year of 2017, 200. In the year of 2018, 400. In the year of 2019, 100. So 200, 400, 100. Okay, closing stock, we have to less closing stock. So it is given in the mention, it is mentioned in the question, like 2,000 in the year of 2017, 7,000 in the year of 2018, and 500 in the year of 2019. So simply just have to put down here in the separate column 2017, 2,000, 7,000 in the year of 2018, and 500 in the year of 2019. So you just simply have to subtract and add this, like add both this and subtract all the expenses and the closing stock amount. Then you will find out, you will get this amount. Okay, number of books sold out, you will get the amount of number of books sold out in the year of 2017. 2,400 books. 2,400 books have been sold out in the year of 2017, and in the year of 2018, 6,000 books have been sold out. In the year of 2019, 6,200 books have been sold out. Okay, so it was mentioned in the question, like in the second point I have already told you to keep in your mind. Okay, like royalty payable at 15% on the printed price of books sold out, subject to a minimum rent amount 25,000 in the each year. So it was mentioned in the question by the examiner that you have to pay the amount of royalty to the publisher, to the to the author by the publisher, okay, at 15% on the printed price of the book sold out. So we, by this preparing this table, we have just simply figured out the amount of books sold out in different year, like in the year of 2017, 18 and 19. Now we just simply have to multiply that amount of books with the printed price of the book. Okay, printed price of the book, and that price is given one book for the 400 rupees. Okay, here you can see in the 4 point, printed price of the book will be 400 for the one book, So you simply have to multiply that with the number of books. Like 400 multiplied with 2400 and 400 multiplied with 6000, 400 multiplied with 6200, you simply get this figure, okay, of the different year. Like in the year of 2017, 18, 19, you just simply have to multiply with the different okay different number of books sold out in the different years. Like simply you will get this amount, okay, 1,44,000, 9,60,000 and 240 and 2,48,000, this amount. And when you are given the question that you have to pay 15% royalty, okay, or at the on the printed price of the book sold out. So simply we have just figured out that amount, okay. So here is our number of printed price of books has been sold out in the year of 17 and in the year of 2018 here, and in the year of 2019 here. You can see this is the figure, okay, we just figure out by multiplying 400 with the number of books sold out in the different years. So if you figure out the 15% of 9,60,000, you will get this amount, okay. 15% of this 2,40,000 and 50% of 2,48,000 and 24,80,000, you will get the 3,72,000 and this amount, okay. That's certain amount. You please figure out on your own by calculating this, okay. So I have already mentioned you that was the meaning of this cost sheet, okay, how it could be beneficial to figure out the amount, like closing amount, if you are not given the question and you are asked to pay royalty on the basis of that, okay, on the basis of that, like using the closing stock amount or the stock which is sold out, okay, this amount of stock which is sold out. So while using that, you can simply figure out that. And I already mentioned, like working note here, opening stock, what we did here, okay, simply without showing the figure, opening stock, then add whatever amount of production or printed price of books were there, and less number of books, less all the expenses are incurred while production, okay. Then you will get the final amount of production, and out of that production, whatever figure of that production, whatever that production amount you just sold out, and whatever remained will be known as closing stock. You are well familiar with this, okay. So it was mentioned in the question. Well, you don't need to prepare this, but for your convenience and to uh, get you in the better way, I have prepared that analytical table as well, okay. Like for the last 4 to 3 videos we have been doing the same thing, so I thought, why don't I do the similar here, okay. Like it was mentioned in the question here, you can see in the last line, please prepare ledger's accounts. Here we need to prepare the ledger's account in the books of Mahesh Book Depot, okay, in the books of publisher, okay. Assume that the publisher write off the amount of Najrana during the period of first 7 year. So here you can see I just simply figure out, well, you don't need to prepare that, but for your convenience I have prepared the analytical table. And despite this, if you don't prepare this, okay, despite not preparing this, we know that what kind of amount, okay, how much amount in the different year is payable to the publisher, okay. I just simply to teach you in the better way, I have prepared that analytical table, okay. Like whatever amount, how much amount of royalty, okay, at 50% royalty on the basis of printed price of the book sold out, which we just here figure out, okay, the amount of print price of books sold out in the different year, okay. 15% of that. Here you can see actual royalty amount and minimum rent. I have already mentioned you was the concept of actual royalty and minimum rent. You just simply have to figure out the difference between the actual royalty and minimum rent, and whatever difference would be there. If minimum rent is greater, minimum rent amount is greater than the actual royalty amount, then that difference will be known as short working amount. But here you can see the actual royalty is actual royalty amount is whole greater in the year of 2018. If you talk about in the year of 2017, 18 and 19, in the all 3 years, okay, in a row, actual royalty amount is greater, so much heightened than the minimum rent amount. So there is no way, okay, such question like to pop out any short working amount. Here you can see the whole amount is there is excess working amount, so the whole amount of actual royalty is payable to the author. Like in the year of 2017, 1,44,000, in the year of 2018, 3,60,000, 3,60,000, in the year of 2019, 3,70,000, 3,72,000. So we are, okay, done here to figure out the what kind of amount of royalty is payable to the author by the publisher. So let's do the accounting treatment of this while preparing the while passing the journal entry and transferring that amount into the ledgers, okay, as it is asked in the question. So here is our all 3 key accounts we need to prepare to solve out this question at the final thing, okay. Like as usual we do all 3 key accounts like royalty accounts, and this one may be new, okay, which plays the role of royalty account, which we have already done in my previous video, okay. And the as usual ledgers account, okay, which is also known as we are paying to the author, okay, by the publisher. So author accounts and ledger account is similar. So I have already told you how to pass journal entries in my previous video. Okay, so simply you have to do here while preparing, while passing journal entries. Okay, in case of copyright royalty, so simply you have to pay whatever amount is royalty is payable. You just have to write down on the left hand side of the royalty account. Okay, and in the end, as you know that this amount is the whole amount of royalty is an expense for the payer, and who's payer here? The payer is the publisher. So that the publisher, what will he do with this amount which is known as an expense? What will he do in the end of the year? He gonna put that amount in the P&L. Okay, he gonna charge that amount in the P&L. Okay, so you just simply have to pass out the entry called P&L to royalty, like P&L account debit to royalty in the books of Mr. Mahesh Depot, Mr. Mahesh Book Depot. Here you can say in the books of publisher. So in the year of 2018, here you can see whatever amount is payable to the whose author. Here you can see in the year of 2018, okay, 3,60,000, whatever amount is payable to the author, like author royalty to author. Okay, royalty to author, like lesser, and lesser to bank. So here whatever amount is payable to the author, 3,60,000, and similarly have to charge that amount again in the different year. Like last time we have charged in the year of 2017, and here in the year of 2018 with the same thing, like P&L account, by considering it as an expense for the published year. In the year of 2019, to lesser account, okay, 3,70,000 in the year of 2019. At the end of 2019, simply again charge that amount with the P&L account, considering that amount as an expense. Okay, as an expense. Here you can see. And first of all, let's take a look at this, like Glazes account. I have already mentioned in my earlier videos that you just simply have to start it with the balance CD. Okay, whatever amount is there, like balance CD, whatever amount is payable to the lesser. Here you can see royalty account. Okay, by transferring that royalty account in the lesser account on the right hand side to the by royalty account in the account of lesser. And you just simply have to close that account by writing that to balance CD. Okay, in the year of 2070, just because of the amount of royalty is payable in the next year, as it is mentioned in the question on 31st January. Here you can see on the 31st January, simply have to move on in the next year in order to pay that amount of royalty to the author of that book. So gonna start the next year by writing down the balance BD. Okay, the opening amount, which was the closing in the last year. Here it will be known as opening amount, as I already mentioned you. And now in the year of 18, how much amount incurred as royalty payable to the author? Similar. Okay, so in the same year, you have to pay that amount which was payable in the last year. In the year of 2017, you have to pay in the year of 2018 on 31st January, as it was mentioned in the question that amount of royalty was payable to the author on 31st January. So whatever amount is payable to the author, here you have to mention here. And the same thing you have to do with the year of 2019. Okay, like balance CD, closing amount. Okay, like here you can see in the year of 2018, the amount of royalty, the payable amount of royalty in the year 2018 was 3,60,000. Okay, which was paid by the publisher to the author in the year of 2019. Okay, which apparently related to the year of 2018, just because of it was mentioned in the question that the publisher has to pay that amount in the next year on 31st January. Okay, so simply have to pass that entry. And in the year of 2020, whatever amount is left as a closing account, you have to fix that amount. Okay, that account by paying that on the next year's 31st January 2020. You don't have to leave that amount, okay, as it is. Whether it is given in the question or not regarding the next upcoming year, you have to finish that amount by paying that amount to the that person who is really entitled to get that amount. Okay, so here who is entitled to get that amount? The author, the writer of that book. Now let's talk about this last one account, advance royalty Najrana. Okay, so here we were, by passing these entry, only two entry, you can prepare this account called advance royalty or Najrana account. Okay, like you have to pay amount in the first entry, which you present the royalty amount which is paid in advance by the publisher to the author, like advance royalty and Najrana, advance royalty account debit to, or Najrana debit to bank. So here you can see in the first year to bank. Okay, 2017. But as it was given in the question that the publisher has decided to return off the amount of Najrana during the first 7 years, okay, you have to divide that amount of Najrana the amount of Najrana by 7. Okay, by 7. The amount of Najrana was 28,000. Okay, the payable amount of Najrana is 28,000. So the publisher simply paid that amount in the year of 2018 to the publisher. The whole amount has been paid by the publisher to the author, but the publisher doesn't want to charge this amount, okay, which is actually as an expense, not the whole amount with the P&L account, okay, with the P&L, but some part of that amount he wants to charge, okay, in a separate year, okay, in a particular year, like in the year 2017 he only wants to charge 4,000, okay, 4,000. So like this, it was mentioned in the question that he wants to return off that amount, the publisher wants to return off that amount in the first 7 years, in the upcoming first 7 years. So simply you have to divide that amount by 7, okay, by 7. Here you can say, so 7 4s are 28. So in the first year 4,000 amount will be written off, okay, will be charged by the P&L, and whatever amount is left will become here. The whole amount has been paid in the year of 2017 in the first year, but returning of that amount, in order to return off that amount, it is his own choice, the publisher own choice, to return off that amount by dividing that, by segregate that amount into a specific part for the different years. Like he has decided to return off that amount in the first 7 years, okay, in the first 7 years. So there is not big deal. So simply you have to carry forward that amount, whatever remaining amount is there after 4,000, okay, after 4,024 you have to carry forward in the next year, so that you can return of that amount, so that you can charge that amount by the P&L account in the next year. And then here you can see 24,000 out of 4,000 has been charged up, okay. Now whatever amount is left in the year of 2018 as closing amount, like 20,000, will be carried forward in the next year as an opening amount. And in the end of the year, out of this amount 4,000, okay, 4,000, a part of that amount will be charged, okay, will be charged, and whatever amount is remaining will be known as closing stock, that will be carried forward in the next year. And like this, 1 year by the 1 year, okay, 1 year by the 1 year, switching year to year, by switching year to year you have to return off that amount for the first 7 years, as it was mentioned in the question. So here we have given only year 17, 18, 19, okay, for 3 years. So in order to represent that thing of returning of that amount called Najarana or advance royalty, we have prepared a table, the account for the first 3 years. Now if it was mentioned in the question for the all 7 years, we would have definitely tried to get forward that amount in the next year, like 20, 21st, 22, 23. But due to lack of very sufficient year, okay, the providing very sufficient years, we are not able here to get forward that amount. So we have to abolish that thing here, okay, we have to stop that thing here. So you just simply have to leave it here, okay, as it is, just because of here our both sides are matched up. Here you can see 20,000, 20,000, 24, 24, 28, 28. And same thing with the in the all accounts, okay, like in the year of 2017 both side has been matched, debit side credit side, debit side credit side has been matched in the account of lasers. And same thing in the account of royalty, okay, in the books of publishers. So like you can simply solve out such kind of question, okay, which relates to the copyright, okay. So in today's video we have seen what's the exactly concept of royalty, okay, copyright royalty, the concept of a royalty, okay, and how to pay that amount of royalty, okay, and what is the accounting treatment if you are paying royalty amount by using copyrights, okay, copyrights of another person, okay. And one more thing, what is the concept of Najrana or advance royalty, are both different or equal? So here we figure out that if we talk about the advance royalty or Najrana, they both are equal, okay, both are equal word, okay. So in order to pass journal entry, what you need to do, here you can see I have already written down here for your convenience. First entry represents the amount of royalty payable in the advance, paid in the advance to the author, and second entry, advance royalty transfer to the profit and loss account as an expense. So we are simply done here after preparing this table, okay, such kind of table. Here you can see to figure out the amount of books has been sold out, and the cost shield I have already mentioned the meaning of that, and analytical table for your purpose. Otherwise we were done here only by figuring out that amount of royalty, 15% amount of royalty on the printed price of books sold out, okay, in the different years. And after that preparing royalty accounts, advanced royalty and lasers account. So here we are done with another topic called copyrights royalty. And if you haven't watched my previous video, so please go and check out first so that you can understand this concept in better way. Okay, so it will become more easier to you to perceive. So thank you very much, and if you really like my video, please subscribe my channel, and thank you very much.